From the floor of the CME Group, this is Danny Riley on today's midday update. Excuse me. A lot to talk about. You know, the S&P has been very busy, but so has been MrTopStep. We had the boot camp between trading, between doing the radio show, and etc. It's been a very, very hard thing to keep up with. But that said, I am going to do my best to get back on these videos. And as we go into the fall, into the fourth quarter of this year, I promise you I'll be back on more often. But anyways, you know, there's a lot going on. And, you know, as we go into the end of this week, it looks like what's going on in the S&P right now is that the buyers are buying into the weakness. Anytime the S&P pulls back a bit, you see these buying balances coming in. It happened off the lows. It happened a couple times right after the S&P made its most recent highs, and it seems to be holding around the VWAP. But anyways, for the last 25 days, while the S&P has been very volatile, it's also been within 20 handles of 1950 for the last 25 days. So, you know, it seems to me that the S&P is trying to hold in here. Now, next week we have a total of 21 economic reports. We have 9 T-bond auctions or announcements. We have 9 Fed governors, bank Fed governors speaking. We have Janet Yellen speaking, and we have the Friday's jobs report. So volatility. The week's packed with the Fed, and it's going to be packed with volatility. And also, I want to remind everybody, while the stats going into after the expiration week were negative, the stats going into the end of the quarter improve a little bit, and going into the beginning of the new quarter, they improve a little bit. Now, today is T plus 3. Now, I would suggest that you look that up a little bit, because that's where the mutual funds can buy and sell stock and hold those stocks until settlement. And what we're kind of seeing right now is a little bit of a pushback from what's been going on in the global markets. China still looks to be a little weak, although not as weak as it was. Europe has improved, but really the S&P is the one that stands out the most. At least that's what I believe. And I think it's regained its leading role as the main index in the world. Now, the thing is with this is we've got 3 days left in the quarter next week, and then you've got the rebalance on Friday. Or on Wednesday, excuse me. I'm kind of mixed up with my days. Now, I want to remind everybody, there's a tendency, we have a trade called the walkaway trade, and that's when the mutual funds, there's a tendency by the mutual funds to walk away from kind of any buying that they're doing, leaving the S&P susceptible to a decline late on Wednesday. But again, the stats are improving a little bit as we go into the end of the month, and they improve a little bit going into the beginning of the month. So I think you've got to be prepared for some type of further bounce here. But again, I don't think that the S&P is any condition to sustain any real rallies. I don't think it is. I mean, we're going to get these bounces, and then we're going to go back down. Now, as far as the price action we're looking at today, as far as what I think we're looking at a late Friday rip. I think the S&P has been trying to, if you look back over the last several Fridays, you've seen the S&P do whatever it does, and then late in the day it starts to firm up, and then we go up in Globex on Sunday night, and we go up on Monday, and that's kind of the feeling that I'm getting here. But anyways, I wanted to let you guys know that I'm still alive and well. We've got an offer out on the Twitter for our boot camp. We're exceptional deal that we're offering to get into the room and get into the MEM, and I hope to see you guys in there. I'll leave it like that, and I will be back with another MrTopStep update.